Wall Street clicks the like button on Facebook stock. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Nothing but green lights on Wall Street after the Commerce Department announced fourth quarter GDP rose 3.2%. And that number will stay at 3.2% until it's revised sometime in the next month or so. Joining me in studio, Matt Koppenheffer and Jason Moser. Guys, our top story, the social network, Facebook shares hitting an all-time high today after fourth quarter profits came in higher than expected. Mobile ad revenue, which was basically non-existent when Facebook first went public, now makes up 53% of revenue, and a huge turnaround, Jason. You got to give credit to Zuckerberg for this one.
No question. I mean, I'll count myself among the skeptics a little while back on Facebook as an investment, and I think they have convinced me that they are the real deal, and there is something there. When you look at the numbers, I mean, monthly average users, daily average users. I mean, the monthly average is closing in at 1.3 billion, daily average 757 million. I mean, I saw some obscure stat that like the like button was clicked on any average December day like 8 billion times. I was thinking, what if they just sold ads for a penny each like? I mean, that would be a phenomenal top-line driver. But I mean, any which way you look at it, I think Facebook knows that this coming decade is going to be all about engagement. And that's why they bought things like Instagram. They bought that sports stream company to get more data in the world of sports and social media. So I think that what they're doing is really working the hacker way, where they just continue to focus on building things, breaking them, and making them better. It's working out. Advertisers go where the eyeballs are, and the eyeballs are definitely on Facebook.
Among the many really good numbers for Facebook, their cash balance now over $11 billion. What do they do with that? Do they go out and buy some smaller companies?
It's a lot of money. It's a lot of money. One of the things that I wouldn't necessarily want to see them do is take a lot of that money and make a really big acquisition. I think big transformative acquisitions often go the wrong way, but Jason was just talking about sort of the hacker mentality of doing little things and breaking them and trying them again. I think maybe there are a lot of little technologies out there. You've got this big giant platform with a huge audience now, so maybe you can get little snap-on pieces of technology that can help you monetize that, help build engagement, that sort of thing. That could be a good use for some of that. The rest of it, maybe shareholders get it at some point.
What do you do with this stock now that it's sitting at an all-time high? If you're someone like me who's sitting on the sidelines and has never clicked the buy button,
you and I are the same there. I never clicked the buy button either, and honestly, I'm regretting that now. But I think that Facebook is a stock that you can plan on holding for at least the next decade. I mean, it's turning 10 years old next week, and to think about what it's done to date is pretty phenomenal. But really, I think they're just getting started. We were talking about acquisitions. They're gonna make some acquisitions. There's gonna be consolidation in this industry, and I actually wouldn't be surprised to see maybe even acquire Foursquare at some point. They could get it for a pretty cheap price. There's a lot of data out there. A lot of people use it these days. But any which way you look at it, I don't like buying on these big pops. So if you're interested in buying Facebook, I'd probably let it pull back a little bit. If you own shares, I'd hang on to them and look to try to build that position out opportunistically over time.
All right, let's get to some of the day's movers and shakers. Visa's first quarter could hardly have gone better. Top and bottom line came in higher than expected. They also reiterated guidance for the full fiscal year. Not really getting much of a pop in the stock, though.
Well, the performance was really good overall, but if you look at the valuation and the expectations for Visa, that's all sort of baked in. So when you have these sort of reports, I mean, they did beat the analyst estimates. Visa beat the analyst estimates, but when you have a stock that's been bid up like this, doing that often isn't enough. So it's just sort of, it's more of the same for Visa, but you're not going to see that big 10%, 20% jump in one day.
Speaking of stocks that are popping, a lot of numbers you could focus on in Under Armour's fourth quarter, but how about this? It was the 15th straight quarter revenue has increased by at least 20%. CEO Kevin Plank says they're going to start to focus more on international. Anywhere in particular?
Well, I don't know if there's anywhere in particular, but I imagine Western Europe is probably high up on that list there, just because that's a pretty sporting popular industry there, sporting popular geography there. They can relate, I think, a lot to the goods that Under Armour sells. But I mean, when you have a sporting apparel business that brings in 35% top line growth, I mean, that's just phenomenal to think about, and they made great leaps and bounds, no pun intended, in their footwear department, which I was interested to see. And, I've actually incorporated more Under Armour footwear into my routine. I have a pair of running shoes. I like them a lot. I don't know if you ever tried them, Matt, but I think they're making some progress there. And then when you look at these big deals they just signed. They got Notre Dame for the next 10 years. They just signed the United States Naval Academy. Kevin Plank had just a funny pun in the call, but now they've got God and country covered. There are just a lot of things that this company is doing right. They're bringing technology into their business with that the MyFitness apps, and so I just think there are a lot of things they're doing right. A lot of reasons to really be happy if you're a shareholder. Again, I don't like buying on these big pops, so if you're interested, I'd hold off and wait, let it pull back, let it come back to reality, and build a position opportunistically over time. It
was not all sunshine and rainbows today. Consumer electronics retailer Hhgregg down big after lousy third quarter results. They also offered weak guidance for the next quarter, and gosh, same-store sales down more than 11%. This is
brutal.
A train wreck, man.
Brutal. The company was trying to find a silver lining in what's going on here, and they said it was the 10th consecutive quarter of positive comps for appliances. I mean, you got to dig that.
And important a storm.
Yeah, it's just ugly. And frankly, when I look at this company, it's a fine, I don't know, they do things, they sell things, whatever, but from an investor's perspective, there is nothing to me that sets this company apart that gives it any sort of competitive advantage. So when you think about why am I going to invest in a company and why is this going to perform and earn great returns for me over the long term, I don't see any of that in Hhgregg.
And finally, CARBO Ceramics up big after a strong fourth quarter. Revenue and profits both coming in higher than expected. It's the sexy world of oil and gas equipment and services. But a great day for the stock.
It's proppants, Chris. I mean, it's all proppants nowadays. I mean, this is actually a company I tapped in my real money portfolio a couple of years back. And really what they do, they sell proppants, which is just basically resin-coated sand that they use in fracking fluid to pull out this natural gas and oil. And what they have seen, they saw great quarterly results, and they see a lot of capital spending coming down the pipe here in 2014. And so that just means a demand for what they sell. Company's doing really well. Stock's popping today. It's no reason to say it shouldn't continue to move up.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
Am I allowed to give Jason props for his proppants first?
Absolutely.
Boom. I'm going to be watching Annaly Capital. Annaly is a mortgage REIT, which basically means that it's sort of a hedge fund that holds mortgage-backed securities. Most of these are backed by the agencies Fannie Mae and Freddie Mac. They actually don't give investors a date when they're going to report earnings, so we can sort of estimate that next week, sometime, maybe next week, maybe the week after, they'll be reporting earnings. But it's been a big time for mortgage REITs because you've got the Fed tapering, you've got a new Fed chief coming in, you've had a lot of movement in interest rates, and this is the world that they play in. So I'll be interested to hear what they have to say about all this going on.
All right, Jason, what about you?
I had a tough decision to make. Amazon and Chipotle both announced earnings later on after the market closes, and I had to pick one. So in honor of Heather getting her Chipotle from the meeting here earlier, I'm going to go with Chipotle. This is a company I cover for Motley for one, and last year in the fourth quarter, they grew sales, top-line sales, 17%. So I'll be interested to see how they grow sales this year, because it is still a relatively small store base with a lot of room to grow. I think the market likes to focus a lot on same-store sales, and that's fine. I think it's a bit short-sighted in my opinion, so I tend to actually look through the column, look for management's comments on throughput, because that's really what this company is all about. What they've done so well is figuring out that platform, how to get people in and out of that line as quickly as possible, because you and I know that come lunch rush hour, man, those lines are just never short. But it should be an interesting call nonetheless.
All right, for Jason Moser and Matt Koppenheffer, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.